Hello and welcome to another episode of Smaulgld subscribers sound off. Today I have with me returning guest and Rhefn from Wales. How you doing today?
Hello, Lewis. Glad to be back.
Oh, it's good to hear. You know, I just started off the show with Mark Battaglia's song Litecoin Charlie, and I had you singing along in the background, but had to cut that take because I did not have the recorder on the proper settings. But next time, we're going to have you sing along, okay?
Yep.
So, what we're going to talk about today is not Litecoin Charlie, or you can bring up Litecoin if you like, is a continuation of a discussion we had last time, and you've since written a very good piece on Ethereum, the DAO, ICOs, and redefining law, and in it you talk about some of the differences, weaknesses and strengths of Bitcoin and Ethereum. And so today we're going to take a look at both of those, and I'll leave a link below to the article. It's very useful to have some background. You can go back and check the article on some of the things that we discussed today. Can you tell me why you went about writing this article and how you selected the theme for the article?
Well, it kind of came up from our first interview when you asked me the first question, which was what's the difference between Bitcoin and Ethereum. And I hadn't really given it enough thought at the time, so I decided that this was the time to write a piece on Ethereum. I'm meaning to get to Litecoin too, but Ethereum seems to be more in the in the limelight at the moment. So yeah.
All right, so Ethereum right now you say is in the limelight, but isn't that more because of price than because of technology? Or are you seeing that there's some developments there that are overshadowing Bitcoin?
Not necessarily, but if the first 3 or 4 years of crypto was Bitcoin and Litecoin really, and then there was numerous schemes that were clones of Bitcoin. So they were kind of trying to disrupt the peer-to-peer currency space. But then along came Ethereum, which offered something pretty different. So it was more of a smart contracting platform than a currency platform. So it's kind of different. It's we talk about the crypto space, and I think maybe 95% of currencies and ICOs are a waste of time. But Ethereum actually has been experimenting with something different from Bitcoin. So I think Ethereum has to be considered at least more innovative than 99% of what's out there.
So it seems that Ethereum is more ambitious in scope than Bitcoin, and that has created some issues. Can you go through the big issue that Ethereum had on its road to building out its infrastructure?
Yeah, which you're talking about the DAO?
Absolutely.
Yeah. So yeah, it depends which way it's very innovative, Ethereum, but they take a great many risks as well, and especially on the platform they've got, which is I kind of started off with Bitcoin being it's a highly secure protocol, but it's very inflexible, and there's not much that can be done with it on the base layer really, compared to what you can do with Ethereum.
Now, before you go on between the two of them, but what is the what can you do with Bitcoin?
Well, Bitcoin's, as I think about it, is an anchor. So it's a secure anchor. So you can send currency peer-to-peer, although, as we have seen lately, it's getting more difficult and more costly.
Mm-hmm.
But still, it's the rock that underpins the rest of the crypto space.
And so has there ever been in Bitcoin an event like they had in Ethereum with the DAO, where the system didn't work?
No, there's the major problem with Bitcoin is what's built on top of it. which are these exchanges or these on-ramps from fiat money into the crypto space. So Bitcoin's network at the moment is only, well, the network has never been compromised or hacked, but the exchanges that are built on top of it, you have to remember this is, nearly brand new technology. So Mt. Gox was the first major exchange to be built on top of Bitcoin. I think it had something like 70% of Bitcoin trading when it collapsed. So the last 9 years has been a sort of building out a network of these exchanges, and to try and extend this anti-fragility as far as we can by encouraging more exchanges. So say today, if one exchange went down, it wouldn't cause the catastrophe that Mt. Gox did.
Well, actually, the Chinese exchange is closed, and we did not have an event.
No, but I think they got the time, and it was, well, Mt. Gox was basically a fractional reserve bank.
Right.
So once there was a run, then it was kind of game over.
But what happens with the exchange is not really a reflection on the Bitcoin technology. Is that correct?
No, it's not. It's a reflection of trying to build something between the fiat ecosystem and this new Bitcoin ecosystem. So these exchanges are built right on top of the Bitcoin network to interact with the fiat scheme.
So they're on-ramps and off-ramps into Bitcoin.
Yeah.
Maybe we could talk about later on how perhaps just being within the Bitcoin ecosystem to conduct commerce might be ultimately where it's going, or having these types of off-chain transactions. But let's now talk about Ethereum, because it is more ambitious in scope, and as we've seen, it has had the growing pains with the DAO. Can you explain what happened there, and then what Ethereum is trying to do? Last time you mentioned that Bitcoin was money and Ethereum was law. Can you expand on that?
Yeah, so the concept of the DAO was a decentralized autonomous organization. So it's basically more of an application on top of a network rather than a company. So this DAO, which was crowdfunded, I think it was $50 million at the time. It had no board of directors. It had no. It's just not a business. So it's built more. If you think about it, it's more of an utility than a business. So this was the purpose of the DAO, but it was badly coded or whatever, and somebody quite intelligent found these weaknesses and they exploited them, and I think they siphoned off a third of the funds. So now you are Vitalik Buterin, and I think it was maybe 20 million that's been siphoned off, and you are possibly worried that the people who have lost their money might file a class action lawsuit, or they might get in contact with the Securities and Exchange Commission. And just to segue in here, in the last 6 months, I think the SEC has designated the DAO as a security. So what Vitalik decided to do was to hard fork and to basically roll back the chain to make sure that that money wasn't siphoned off. But because this was basically compromising the immutability of Ethereum, if you ask me what's the point of a legal blockchain and platform, is one of the key aspects of this kind of blockchain is that it can't be rolled back. And there was a small minority of Ethereum developers who felt that he was compromising Ethereum by compromising its immutability, and so he couldn't get a clean and consensus hard fork, and thus Ethereum split into two chains. So Ethereum Classic is the unbroken and original chain, and Vitalik has basically forked off a new blockchain called Ethereum, which is roughly similar to what Bcash did with Bitcoin. but it's kind of flipped in that Vitalik took 90% of Ethereum on the fork chain,
Right.
while Bcash forked off. Well, it's 15 to 20% at the moment.
Right, because Ethereum Classic has a market cap of about 4 billion, and Ethereum has 135 billion. And as you mentioned, the Roger Ver Bcash fork has a market cap of 46 billion, but the original Bitcoin has a $242 billion market cap. Now let's assume that, now we understand that what Vitalik did was designed not necessarily to save Ethereum, but to save investors' money, to save himself. But assume that that's behind us now, and it does highlight when you have an ambitious technology that's trying to do a lot of things. But what are the things that the DAO are trying to do when you say that it's somehow going to create law, create contracts? What is Ethereum useful for? If it actually works according to how they wish it to work.
Well, what I think Ethereum is, it's a great testbed. It's a testbed in development of these, I think I would call them kind of public utilities, these decentralized autonomous organizations. So they just allow you to crowdfund businesses or projects, but they kind of cut out the lawyer, if you understand what I mean.
All right, now but cutting out the lawyer. You would say, well, why would you want to cut out the lawyer? Why would you want to cut out the legal system? We were talking before we got on. I had an example that you explained to me would have benefited my circumstance in my interaction with the legal system. And I'll just tell our listeners quickly what it was. I was buying a home about 10 years ago, and I had gone through the normal process. I had put down the deposit, the 10%, and in the contract to buy the house, it was a new house, it was new construction. When it was built, I would turn over the rest of the money and they would give me title to the house. The contract had a provision, was already in the standard form contract, that if the house wasn't ready in 6 months for whatever reason, that I could ask for my money back. And they were comfortable putting that clause in the contract because the house was pretty much done when I decided to make the offer on the house. Now, 6 months came and went and the house wasn't ready. In the interim, I had a job offer far away from that house, so I didn't want the house anymore. And I didn't know what to do with it, but then I realized the contract gave me an out. So I sent a letter to the home builder and I said, house isn't ready, let me have my money back. And he said, no. And I said, what do you mean, no? The contract says if it's not ready for any reason in 6 months. And he says, well, I'm having trouble getting the permits. And I said, I don't care what trouble you're having with the permits. You're supposed to get it done. You didn't get it done. He says, well, I'm not giving your money back. He says, how about we sell the house and I give you half the profit? And I said, I don't want to be business partners with you. That's got nothing to do with our contract. He said, well, I'm not giving your money back. You got to buy the house. So I call a lawyer. The lawyer calls him and he says, no, I'm not giving your money back. So the lawyer, I have to pay the lawyer to file a lawsuit. They go to the court. Now, at this time, I've already moved and I can't attend the court hearing, but there's really no reason for me to be at the court hearing because it's a simple case of the contract says if the house isn't ready in 6 months, I get my money back. My lawyer goes to the court house, to the judge. The builder's lawyer goes to the courthouse. They have the quick discussion. And the judge says, whoa, where's your client? To my lawyer. And he says, well, he's not here. He says, why isn't he here? He says, well, he's in California. He says, well, I think that he just doesn't want to buy the house because he wanted to move. And my lawyer said, what difference does it make? The house isn't ready anyway. The contract says he needs to get his money back. He says, well, the fact that he's not here shows that he maybe didn't want to buy the house in the first place. And so the judge says to the lawyers, both lawyers, I think you two should just work this out and you should settle. So my lawyer calls me back and tells me what just transpired. And I said, well, that's ridiculous. Why should I settle when the contract says I get my money back after 6 months? And he says, well, you're right. And if I were to file a lawsuit at the next level higher in the court, you would most likely win, but that's going to cost you $15,000. of course, the deposit, and I've already spent $10,000 on the first lawyer. Deposit's not that much in the first place. So what happens is I end up settling for half of my deposit. Now, how would that have worked under a smart contract scenario?
So, let's say, you know, you just talked about the immutability of the existing law system. So, you know, let's take it that we put it on Ethereum. In this contract, the smart contract, you could have written in the conditions that, so you send a deposit into an escrow, and then you write the terms of the contract that in 6 months, if the contract is not fulfilled, then the escrow releases and you get your 10% back. So there wouldn't have been a way for him to kind of get to your funds unless he fulfilled his part of the contractual obligation. So if you know, with something like multi-signature technology, it would take both of you to agree for the escrow to be unlocked. For if he fulfilled his contractual obligations, then the contract would lapse. But if the contract doesn't execute properly, then you can get your money out your side.
See, that gives the average guy like myself a great equalizer, because the rich guy who runs the construction company and has a lawyer under a retainer, then he knows that he can actually use the legal system and waste resources to get a result that he wants. Also, you run the possibility that the lawyer knows the judge, or there's some type of arrangement. We also know that the lawyer gets paid for his work, my lawyer got paid for his work, and the judge got paid for his work, when basically there was a lot of money changing hands and none of it benefited me. And basically my contract rights, even though I had a contract, were not enforceable unless I was willing to spend money in excess of what I was going to lose.
Which is a disgrace. But you know, under the scenario of a smart contract, you both would have agreed these terms before you enter the contract. So he knows that if he doesn't deliver in 6 months, then he loses your deposit. So that kind of keeps him more honest too, instead of, you know, the current scenario where he pays a lawyer on retainer because he knows it's going to cost. Well, it's like the banks paying these fines. It's just the cost of doing business. The costs of the legal system to bail them out is a fraction of the profit they make by screwing other people over.
Right. So basically, the legal system worked in favor of somebody who had the resources to protect property rights, or actually perverse property rights, whereas my property rights were only enforceable if I was willing to spend the money. So the contract itself wasn't really worth the paper it was written on. It was more based on how much I was willing to spend on a lawyer to go through the legal system to find a judge who would agree that the contracts actually should perform as it said it should.
Yeah, Honoré de Balzac, a French philosopher, had a great line on this. He called the laws spiders' webs through which the big flies pass and the little ones get caught.
Yeah.
Absolutely.
So when people complain, or you see them on YouTube, that cryptocurrencies and all this stuff, it's a scam and it's out to enslave you. Well, I would argue in this case, it would have helped me tremendously to have had a smart contract powered by, you can call this a cryptocurrency, powered by Ethereum. And I wouldn't see how that is somehow enslaving humanity whatsoever. It's actually empowering an individual who otherwise couldn't enforce his contract right.
Yeah, and this kind of comes down to, you know, civilization. Civilization is basically built on private property. So if you have, and you know, smart contracts, this will soon be coming to Bitcoin, so you will have immutable smart contracts, you know, and this is a global ledger which anybody can connect to, and once the title deeds of your property are in that blockchain, they are there forever. So everybody knows who owns what.
Now,
So
explain how you mentioned that Bitcoin performs one function of money, currency transfer, performs it well, has never been hacked. What are some of the plans that you say to add smart contracts on top of Bitcoin? How would that work? And what impact would that have on the Ethereum blockchain?
right, well, the first development in smart contracting we are actually seeing right now. So this Lightning protocol, as it's called,
Hmm.
is kind of protocol that's built on top of the base. So if you think of internet the same, the internet started off as the Ethernet, and then to scale the Ethernet so that every computer didn't have to go through the Ethernet. They scaled TCP/IP, which is a layer on top of Ethernet. So this is the kind of the same principle with Bitcoin, in that this Lightning protocol now allows that Bitcoin to move up a different layer, and it basically weaponizes transactions at zero cost. They're going to be anonymous, onion routed through kind of they're Tor like anonymous routing networks. So you can move your money basically for free anywhere you want, and it's instant confirmation.
Now, when you do this, you're doing it, as you say, off-chain. It's not a Bitcoin technology. It's actually a second layer, and in this case, it's called Lightning Labs that is performing this or providing this technology.
Lightning Labs is one company that are building on top of the Lightning protocol, but there are others. So I think there's 3 or 4 Lightning type companies working on top of the Lightning protocol. The Lightning protocol is it's like an internet protocol. So it allows different companies to work with the same implementation. So it's kind of like Bitcoin. Bitcoin is the base layer, and the decentralized digital underpinning of the system. The Lightning protocol is a protocol that sits on top of Bitcoin, but allows any company to work on that protocol. So Lightning Labs isn't the only company. There are a few more.
So what is the impact on, or what would be the advantages of using a layer on top of Bitcoin to perform your smart contracts versus using the original Ethereum or the other Ethereum blockchain?
Well, these they're carried off chain, so they're basically anonymous. They're tied to the base chain through you have multi-signature technology, and you have these time verify and check sequence verify, which kind of anchors in time. So this is kind of a full reserve banking concept. So instead of a fractional reserve bank, you have a full reserve bank. So you can't create bitcoins out of thin air on this layer, because it's directly underpinned by the base chain. But it takes all these transactions off the base chain.
Okay, so it takes them off the chain. The transaction happens off the chain, but then from what I understand, they then record the off-chain transaction back onto the original chain. Is that correct?
Yeah, but once that, so you open a Lightning channel on this Lightning network. So say you carry out 100 transactions on that Lightning network, none of them go back to the main chain. So say you complete 100 transactions, then you decide you want to take your Bitcoin back to the bottom chain. There'll be one transaction, and your Bitcoins will be back on the main chain. So it's just it's a way of transmuting your savings into spendings by simply moving them up a layer. So by extension, you were talking about smart contracts. There's this company emergence, I think it's just gone live last week, which is called Rootstock. This is basically Ethereum for Bitcoin. So this is a smart contract layer on top of Bitcoin that, it can do anything. It can probably do more than Ethereum can do. Because it doesn't have a base chain. It's kind of pegged.
Is there a token associated with Rootstock?
No, I don't think. I think there will be, but it will be underpinned by Bitcoin, if you understand what I mean. Same as a Lightning network. You won't be able to carry out any root or smart contracts without Bitcoin. So Bitcoin is your savings, and then these transaction layers and then the smart contract layers will allow you to be your own payment professional and eventually be your own lawyer.
Okay, well, while I'm digesting this, I'm thinking about, I know you want to talk about initial coin offerings. And initial coin offerings generally rely on Ethereum. Maybe you could talk about initial coin offerings. And then my question later on is there a way of doing an initial coin offering with a layer on top of Bitcoin?
Yeah, so this, I think, is one of the most interesting things I've seen in a long time. So another reason why I'm not a pure Ethereum hater, because I think they actually do bring some innovation into the space.
Mm-hmm.
So initial coin offerings are simply the bypassing of traditional regulators and bankers in funding new startups. So this has kind of massive implications, but because of the money that's flowing blind into this space at the moment, it's, you know, the money's going into, well, 99% of it's just garbage.
So what's going to happen now with ICOs now that they're under scrutiny?
I'm not sure who's behind these altcoin or ICO pumps. You know, I'm not sure how organic it is or whether it's just some big whales, cough Roger, in the background trying to pump these things and trying to make Bitcoin look archaic or whatever. But I think this is coming a kind of a game between whoever is investing in these things and regulators. In that the more the SEC kind of stands back and doesn't really get involved in this, the more these things are just gonna force them to do something. We've seen in China, for example, they banned ICOs. South Korea, I think, clamped down on ICOs, but you know, we've still got well, Russia. I think Japan,
yep. South Korea.
I think, and then we have got the two elephants in the room, which is going to be the US and what the SEC is going to decide to do, and the EU. The same.
Well, one of the things I've noticed about people investing in ICOs, for the most part, the people that invest in ICOs have no idea what they are. The way an ICO is structured is generally not even going to give you anything, because a lot of them are structured to try not to be securities, to try not to give you an ownership interest in the company, in which case, why would you invest in it? Because it isn't anything. It doesn't give you an ownership interest in the company, but because it goes higher, that's why people invest in it. And one of the things I noticed about the new wave of investors that have pumped these ICO type tokens almost to the level of the original cryptocurrencies, and some of them higher. You've got so many of them now that the Bitcoin market cap, as you mentioned, is now only 33% of the overall space, and yet the development and the ecosystem around Bitcoin far exceeds the work that's gone into a white paper. In many cases, some of them are just the same white paper under a different name. And one of the things I've noticed is that the original Bitcoin investor, the original Bitcoin proponent, pretty much knew what Bitcoin was and could explain, and was more than willing to explain, even when you didn't want to hear about it, what Bitcoin was, what it could do. But I've noticed you talk to people about some of these new ICOs, they have no idea whatsoever what they bought, what it is, why it is. They just know that it's going up. And that, to me, is dangerous, because if you don't know what you bought, there's no reason to own it other than it's going up. And then if it goes down, well, there's no reason to own it because you never knew why you owned it in the first place. So do you see this continuing, or do you see a return to some of the more, I wouldn't call them traditional, but the more useful, more developed types of technologies than the pie in the sky ones that are just white papers?
What I think is going on is it's basically a wave of FUD, which is fear, uncertainty, and doubt. So as Bitcoin scales, it's run into problems, and because of Bitcoin's legal structure, it is virtually impossible to have a consensus hard fork, which means that well, consensus hard fork or consensus soft fork, because it took us 2 years to get SegWit. So Bitcoin is being slowed down by what I would call bad or malicious actors, which Bitcoin has to handle, by the way, because if it can handle these attacks, then it can survive.
Right.
So in the meantime, what it's done is kind of given some freedom to these coins which have not scaled yet.
Mm-hmm.
But now they are starting to scale. So for example, now we are starting to see $4 or $5 transaction fees on Ethereum. So after laughing at Bitcoin for the last couple of years because the fees are going up to $1 and $2 and saying that it's unworkable, the same is now starting on Ethereum. And if Ethereum's price were to double again, the fees would double again. Because if Ethereum doubles in US dollars, then the fees in Ethereum will rise by double in dollars. So I think maybe they're starting to get the memo here too. So what you have is you have mainstream media and alt media to an extent pumping up these utter shit coins because because they're going up. Market cap is a bad metric really, because say you sell a couple of Tron coins, for example, for $1, and then you extrapolate from that Tron has such and such a currency cap, then all of a sudden Tron is worth, $20 billion or whatever it is.
Right. And it's a white paper.
And it's a white paper.
And some say it's a white paper that's basically no more than a cut and paste from another white paper. Yeah, so
when people say that this is the .com bubble redux, I have to agree to some extent, because there's just a wave of blind money flying into this space, and what I think is that you have a small amount of big whales who are pumping these illiquid coins with their Bitcoin, and then trying to get these investors that haven't got an idea what they're doing to buy their pumps.
Well, so knowing that they issue them at a penny or 2 or 3, they can pump them up a few cents. People see it and they jump on the momentum train, not realizing that there's 36 billion, 56 billion of these coins, not realizing that when the price goes to 50 cents, the thing is worth $30 billion. And yeah. I remember I wrote about 6 months ago, I said the bubble in cryptocurrencies is in ICOs, not in Bitcoin and Litecoin and in the other, the Dash and so on, Monero, but in these ICOs that don't have anything behind them, not even development work, but just saying here's the technology, and there's a white paper and there's a token associated with it.
And this is truer than ever 6 months later, because we were talking about the first interview we carried out. Ethereum was at 35 billion. It's now, I think, over 100 billion.
Yep.
So it's tripled in the last 6 months. So what I think is going to happen is, it took us 2 years to get SegWit, and after, we got SegWit, I thought then that the altcoins would kind of blow up.
Well, I have a question on altcoins. Now, you wrote that, and a lot of people say this, that once you get SegWit, once you get privacy, anonymity in Bitcoin, that you obviate the need for Monero, Zcash, Litecoin. Why would you say that? I understand that if Bitcoin can perform what the others can perform, but why wouldn't you also, why would it not be valuable to have Monero with 10 million coins, Litecoin with 84 million coins, Zcash with 10 million coins, even if they're just replications of Bitcoin?
Because they're not scalable. So if you put Lightning on top of Lightning Network on top of Bitcoin, it will obliterate something like Monero. Because as the bigger Monero or any other of these coins really scale, the more their base chain is going to cost to run, and the more they're going to need to try to scale second layer solutions themselves. So for an altcoin to really succeed, it needs to develop in the same way as Bitcoin does. And as Ethereum have been talking about with sharding and this Rhefn, which is a kind of a lightning network for Ethereum. So Ethereum has the same problems as Bitcoin, you see, but I think it has bigger problems. It's got bigger blockchain bloat, and yeah, I just think that, you know, Ethereum is now starting to hit its own scaling limits.
So here's a question for you then. If what you're saying is true, and if markets operate under the idea that eventually information gets to the market and it washes away the speculative excess, eventually people should be able to see that some of these ICOs that are now worth billions really aren't worth anything. And that would mean that if Bitcoin's market cap of the total crypto space is now down to 33%, that as long as the crypto space is not impacted adversely by draconian pronouncements of illegality, and the market allows to continue the way it is today, would you think that Bitcoin would regain a substantial portion, not just from the ICOs, but also from the altcoins?
Yes, I do believe that. So what the problem is at the moment is we have this first generation of companies that were built on the Bitcoin base chain. And so, you know, you can see the pressure starting to rise now with these fees and with the community trying to force these companies like Coinbase to adopt SegWit, which would, you know, severely streamline the base chain. But I don't think these companies are technologically good enough to be able to implement SegWit. So the way I think this plays out is that new companies which now build these on-ramps will be built with SegWit in mind, and they'll just outcompete the old first generation companies. So, you know, we're talking Coinbase, hopefully Bitfinex too, because there's a lot of rumors of scams around Bitfinex. I'm not sure if Kraken and Gemini have implemented SegWit yet, but Local Bitcoins has, which is a far more decentralized exchange than either Coinbase or Bitfinex. So I've always been a fan of Local Bitcoins, and I think BISC possibly, if it hasn't SegWit at the moment, is going to get it soon. And most importantly, the core wallet, which you can run a full node with, the Bitcoin Core wallet, I think the next release is going to be SegWit.
Well, you know, it's interesting. I had been reading that Coinbase has not implemented SegWit and it had no plans to do so. However, while we were talking, I looked up and I found a December 15th on the Coinbase blog saying that they are planning on implementing SegWit in 2018.
Yeah, well, I'll believe it when I see it. You know, Charlie's left Coinbase now, and I'm not sure the standard of the team they have left there, because, you know, that's the kind of problem, is that Bitcoin as a protocol will evolve, and it's not necessarily that the exchanges built on top will evolve with them. So if you don't evolve, you will die. For example, I've heard that Bitflyer, which is a major and regulated licensed exchange in Japan, is going to implement an exchange somewhere in the USA, and they will have SegWit. So they are going to blow Coinbase out of the water if the user interface and the on-ramp is, easier.
All right. Now, before in our last couple of minutes, I want to talk about gold and silver, because before you got involved in the Bitcoin space, you studied Austrian economics, you studied the gold standard, you studied what money means, regression theory of money, silver, and so on. And now I think clearly 2017, Bitcoin, cryptocurrencies dominated the news space. And now we're seeing gold having risen 2 years in a row. It's closing in on multi-year highs. Where do you see gold going, not just in price, but how is gold going to be viewed in I don't want to call it a new paradigm, but where does gold fit in now with all that's been going on the last 5-10 years with the financial crisis and the advent of cryptocurrencies?
Well, it's a good thing you brought this up because my next post is going to be an update to my original gold on the blockchain post.
And we will have you on as soon as that post is finished.
Well,
Let's give us a preview of what you're covering.
So, what the title of the post is going to be Gold on the Blockchain Revisited, Building Bitcoin's Gold Standard from the Bottom Up. So, in my original post, I described the decentralized gold standard, which would be kind of a network of exchanges built on top of Bitcoin, of which we've seen, well, the first two, Vaultoro, which operate out of London and Berlin, I think, and Gold Money. But I noticed that you put a tweet up late in the last couple of months where how many gold coin shops are now accepting Bitcoin. Remember Sharp?
Basically, all of the online, mostly all of the online bullion dealers do now accept Bitcoin, including AppMex, Gold Silver, JM Bullion, and so on.
So this is the beginning of the decentralized gold standard, in which the online companies, they accept fiat and they accept Bitcoin, but for the moment I'm assuming that most of them are going to convert back out into dollars after accepting the Bitcoin.
Correct. They use BitPay or Coinbase to do the conversion for them.
I think if they're smart, at some stage they're going to recognize that it's better for them just to hold the Bitcoin, because say if 1% of your sales come from Bitcoin, then I think it would be a good idea for them to start just holding the Bitcoin.
You know, that's the same with me. I started taking donations in Bitcoin, and I had them run through a processor in 2015 and 16 into fiat, and I didn't hold on to the Bitcoins, and I lost out big time. And people were giving me, at the time, $25, $30 worth of Bitcoin, but that would be $250, $300 now.
Yeah.
And so I was converting it automatically into fiat.
Because this is going to start slow, so you know, people are not necessarily wanting to spend the Bitcoin at this time, but they are going to spend it at some time. So I expect, you know, the more intelligent of Bitcoin investors to diversify into precious metals. Now, if these exchanges start holding the Bitcoin, they are now on the Bitcoin gold standard. So they are working on two standards, the dollar standard and the Bitcoin standard. And those Bitcoin starts to get adopted more, then more of the sales are going to come through Bitcoin. So in the end, I think Bitcoin is going to disrupt the dollar pricing mechanism for gold. And I think that miners are going to go direct to dealers. They're going to cut out this, you know, this authorized dealer system that the US and I would assume most other countries have. And so you can start to reprice gold, but not in dollars or pounds or yen or euros, but in Bitcoin. And because Bitcoin is independent from, you know, the dollar has always been tied to gold. And the only way the dollar can survive is by manipulating gold downwards. Well, Bitcoin doesn't care about gold. So, which means that gold can find its price, its proper price, independently of fiat.
Well, now that's an interesting question. And this is the last thing I want to ask you for today before we run out of time. But if gold is priced in Bitcoin under the scenario that you describe, would gold rise versus Bitcoin?
No, because if you think about it, Bitcoin would be the standard, not just the gold, but it would be the standard for silver.
So gold wouldn't rise against Bitcoin, but you would envision Bitcoin rising against the dollar, and therefore gold would too, even though you're saying it wouldn't rise as fast as Bitcoin.
Yeah, because if you're basically setting gold free from dollar manipulation. So it kind of cuts out the dollar, and it cuts out the bankers too, if you think about it, because the bankers are able to corner the gold market, whereas Bitcoin, because it goes up in value more, it basically well, it kind of obsoletes their power.
Well, it sounds like, now I got one last question on gold, but then I want to quickly move to silver. If gold were to move to the prices in conjunction somewhat with a higher Bitcoin price, that would make jewelry unaffordable in gold because it would have too much of a monetary value. So you can see where I'm heading with this. Then wouldn't silver also rise, but of course not to the same level? And then people would try to buy silver for jewelry.
You know, your question that you keep saying, your statement that you keep saying that the gold-silver standard, the gold-silver ratio is sustainable, as everybody else keeps saying it's unsustainable. Well, if gold and silver were both on the Bitcoin standard, then I would be interested to see if the ratio actually came down, you know, somewhere closer to where the metals are coming down.
Well, that's my question, because if gold becomes too expensive, then a tremendous amount of interest goes into silver, and then silver would rise exponentially.
If it was too expensive, it's not going to become too expensive in Bitcoin.
Correct, but well, then you would argue possibly then the ratio could stay the same.
Yeah, I don't know. It depends on the use cases for silver, because if silver rises substantially, then I would have thought that would, you know, impact on what it can do in industrial applications. Because I just listened to your podcast with Josh Wiley the other day, and he said that copper can do a lot of the stuff that silver can do.
Yes, that's true. Copper conducts electricity. Copper is antibacterial, so you can have a copper standard as well.
If silver becomes too precious and costly to be used in industrial applications, then other metals or compounds or whatever can be used.
Like graphene. You know, graphene is just made out of carbon. It's cheap. They can use that in electronics.
So silver's been money for the last 5,000 years, but you know, in the last 50 years, it's been developed for industry such as electronics and stuff like that. But there's nothing to say that silver can't go back to both being monetary and an industrial asset.
Oh, I agree totally. In fact, what would make silver a better monetary asset would be a higher price. Because if you have to store pallets of silver at a 75-to-1 ratio, it becomes very expensive. And that's why very wealthy people will get a Swiss vault and put in a few hundred ounces of silver, of gold. It's the same amount of money. They'd have to put a few tons of silver away. And they couldn't store it at that price.
I think silver's still a very scarce metal. I've never sold any of my silver or my gold.
Well, that's interesting. I want to talk about next time when we get on the air. A lot of the gold and silver people are furious, and they really hate Bitcoin. They hate the crypto space, and I don't think they realize the extent of how many sound money gold and silver people have migrated to and have embraced the crypto space.
If gold bugs are smart and they kind of understand sound money principles, and if you invest, say, 10%, well, say if you had have invested 10% of your worth in Bitcoin this last year, that would have, say you put 90% in gold at the start of last year and 10% into Bitcoin, the value of both would be the same now, because Bitcoin's gone up from, I think, 1 ounce to 12 ounces. So if you're a gold bug, you could have taken out 10 ounces of physical gold. You could have sold your Bitcoin, take out of circulation 10 times the amount of gold you could have put out last year. So you imagine 1,000 or 10,000 people getting a 10x gain. They suck 10 times the amount of physical out of circulation, which it doesn't help the bankers, does it?
Nope, and that may eventually happen as people see bigger and bigger gains in their cryptos. As you say, they'll diversify back into the gold and silver. And I want to thank you very much for joining me today on the Smaulgld Subscribers Sound Off series. And can you let our listeners know where they can find you online?
Yeah, I've got a Twitter account, which is, my handle is at Rhefn, which is ANNRHEFN, and I have a blog at rhefn.wordpress.com.
Okay, and I'm going to link to the article we discussed today, and you guys should subscribe to that and website so that you receive the new update on gold and silver and the blockchain when that comes out. When do you expect that to be ready?
I hope it'll be in the next couple of months.
All right. Well, you'll sign up for that, and you'll get that when it comes out, and then we'll have another discussion in a couple of months. Thanks for joining me.
Thank you very much, Lewis. Pleasure as always.